Good time to bring in Lou Basenese. Lou, you're telling people to stay away from social media stocks. You call them dumpster fires. Is it that bad?
I think it's that bad. I mean, who needs soap operas like General Hospital with Jason and Sonny when you got Elon and Twitter? Look, you have to look at the fundamental problem with social media is that it's an overcrowded market. You've got a lot of platforms competing for the same users, and there's no innovation. There's no patents that protect differentiation. So you see them rip off each other ad nauseum. And most important, above all else, in these economic times, when we're staring down a recession or are in a recession, like I've argued, that's terrible for these social media businesses. They're run by ads. So their fundamentals that drive the stock prices, no matter how far they've gone down, are not going to improve. A lot of people right now want to suggest that Meta is just a screaming bargain. And I'd argue even at 13 times earnings, it's going to get a lot cheaper still as the ad rates continue to fall and we get into the teeth of this downturn.
You say also the market now biased towards stock pickers versus those allocator, those who do allocations or play the indexes. How long is that going to stay around? Because this is such an uncertain environment.
It is uncertain, but I think this is what you see in a volatile market that's fighting for a new bull market is indexing doesn't work. Buying simply the FANG stocks doesn't work. We're seeing that. Big tech, as you brought up, is reacting not on fundamentals, but on interest rates. So you have to be a bottom-up stock picker. I think there's pockets of opportunity in small caps and biotech. And if anything, look for value in trends that we know are going to last longer than the next presidential election. And that's things like cybersecurity, semiconductors, robotics, automation. Those things are going to be around longer than you and I, Ashley. So, that's a good investment to make.
Certainly longer than me, that's for sure. So you like to pick up on that. Biotech, you think can bounce back. Any particular names in that sector?
Yeah, biotech, I think there's some great names. There's a company on the move today, Innate Bio, up about 50%, some really compelling data. But I think for the everyday investor, it's best to pick up the smaller cap biotech names with an ETF, the XBI. It bottomed in mid-June in the low 60s. It tested the historical lows going all the way back to 2016. And we're seeing big pharma get back to buying small biotech companies. So the XBI is a safe, prudent way to play that trend coming back and bouncing.
Always a fountain of information. Lou Basenese, great stuff as always, Lou. Thank you very much.